The Adani Group and its promoter, Mr. Gautam Adani, has been in news over the last few years for various reasons. This time, on the 25th of January, it again came into news because of a research report released by a US research company by the name of Hindenburg, which has led to a lot of controversy and like a hornet's nest being opened here. In this video, I will talk about in detail the sequence of events that have taken place since the 25th of January of this year. What exactly is this report about? How true is the report, or is there any hidden agenda of this research company also in relation to the Adani Group? More importantly, what is the role of SEBI and what can actually SEBI do here, if at all? We will be discussing all of this in this particular video. Hello everyone, welcome to iExamB, the only platform that helps you to unfold your potential by understanding. This video is going to be a long one in which I will discuss in detail the events, what their implications are, and also analyze certain few points. So please watch this video with some time at hand and in detail try to understand all the events. I will discuss in detail what is the Hindenburg report saying, what has been Adani's response, and how it has impacted the Adani's group various listed company share prices in the market over the last 2-3 days, and what has been SEBI's response. In addition, we will also try to understand how true this report is, or if there is any hidden agenda being carried out, and try to analyze that by looking at Adani Group's business structure and their business expansion strategy over the last few years. Hindenburg has also taken a short position by short selling the stock. We will try to understand what that means, and also in the end what can be the SEBI's role over here. So please do watch till the end. It will be a very interesting and long video, but full of analysis and important details at one place. So let's start with our analysis here. This is a glimpse of the Hindenburg Research report. If you are interested, this is very easily available on the website of Hindenburg Research itself. The report starts with a summary of its key findings. It's a very, very long report of around more than 100 pages. In which they have summarized their findings and stated that they have been investigating this company for over 2 years, and they have found that the Adani Group has engaged in brazen stock manipulation and accounting fraud schemes over the course of decades. So this first statement that has been mentioned in the report is the one that has actually caused a lot of movement in the Adani Group and its listed company share prices. They have actually accused the company of manipulation and fraud over here. They further go on to say that the founder and the promoter of the Adani Group, Mr. Gautam Adani, has actually amassed a net worth of roughly $120 billion, of which 100 billion has actually been added over the past 3 years through stock price appreciation. Right, so majorly his net worth is comprising of the stock prices and the appreciation that has happened in its various group companies. So in Adani Group is a very big conglomerate of which around 7 companies are already listed, and Mr. Adani, being the founder and chairman, has a substantial stakeholding. So when the prices of these companies, share prices of these companies increase, they also have an impact on the net worth of the company. So basically the report is saying that he has become wealthy because of the increase in the stock prices of these listed companies. There are other things that he has gone ahead to speak. The report is speaking like, they're also telling that the Adani Group people at the top who are there, they are basically all the family people. So the company is being run like a family business, with all the key decisions being taken by the family members of the Adani Group. They also tell that there is a substantial debt at a consolidated level. All these companies have huge debt that they have, and this they have amassed by pledging of shares of their companies whose prices are actually inflated. The report also says that even if the acquisitions that they have made related to manipulation and accounting fraud is not true, even then fundamentally the prices of the Adani Group listed companies is overvalued substantially, and they see an 85% downside on a fundamental basis. So what that means is, when the companies prices are there, of course they are on the basis of demand and supply, but they also carry an intrinsic value, or what their value actually should be based on the growth prospects of the company, right? So when we analyze and try to find that intrinsic value, it is known as the fundamental value, the fundamental basis on which the company should be valued. So the research report here has said that given the high debts the company has and the business prospects that they have, the share prices of the Adani Group listed companies are actually overpriced in the market, and they have a downside of 85%. That means they are overvalued to an extent of almost 85% over here. So these are some of the things that they have mentioned, and one more important point that they have mentioned is that the Adani Group has previously been in focus of 4 major government fraud investigations, right? So it is not new for Adani Group to be in kind of certain fraudulent activities, is what has been said by this research report also. So these are few of the points that I have picked up majorly that have been stated by Hindenburg Research report over here. If you will notice here, one of the points about Mr. Adani actually amassing a net worth which has been also because of the increase in the share prices of various group entities in which he has shareholding. You will see how this has actually made him in the 3rd richest person globally, right? He is the first from Asia. So this was, the report was somewhere in the August of 2022 when Mr. Adani had become the world's 3rd richest person, right? But after this report, there has been a sharp decline and fall in the prices of the 7 listed companies of this Adani Group, and within 24 hours, actually, the Adani Group companies lost a lot of net worth, with Mr. Gautam Adani losing almost $872 million, which made him slip to the 4th position of the richest person in the world as against the 3rd position. So this is how substantially, the net worth also consists of his shareholding from the 7 listed companies. So this is how you can see here. So this is what the research report has said. How now Adani has responded, or the Adani Group has responded, is they also, on the day of the report was released, they said that this report is a malicious attempt to malign the name and the goodwill of the Adani Group as such, and they have also responded to a lot of queries that the research report has put out. Actually, there are all some 80 plus kind of queries that the company's research report has put out at the end of the report. And to answering to some of them, actually Adani Group mentioned that a lot of queries that they have raised, actually almost 20 to 21 kind of queries that they have raised, the answers of that can be very easily found from the publicly available data in the public domain. So Adani Group, a lot of companies are already listed, so they do disclose and share as a part of the regulatory requirement a lot of information and financials data related to these companies, which is very easily available in the public domain. So asking those queries and making acquisition based on those queries is incorrect. They've also gone out to tell that yes, the company has raised debt with the help of pledging of shares. However, the pledged shares are only 4% of the overall shareholding that Adani has in its various group companies. So it is not huge on the major way in which the debt has been raised. So these were few of the rebuttals. Like this, they have also given responses to many of the points that have been highlighted in Hindenburg report, including that the company is listed. They are, their revenues, cost, capex, they are already prone to scrutiny, and they fall under various regulatory bodies, and they comply and provide disclosures of all formats. Their debts are highly rated, and they have been rated for all their companies, almost 100 plus companies that are there in the group, and they have been rated by reputed credit rating agencies. So there is no point of putting such acquisitions. Their financials are also audited by the top 6 auditing firms in the world. So having said all these things, Adani has responded that these are baseless and meritless kind of acquisitions that have been made on the Adani Group. And in response, Adani has also threatened legal action against Hindenburg Research report over here, on the 27th of January. So these have been the events that have taken place with the research report coming out and then Adani responding to it. How has the market responded? This is about the financial and the stock market. I'm talking about the market has actually not taken this too well. So if you will see after the release, these are the 7 listed companies over here of the Adani Group, and all of them saw a substantial fall, many of them actually hitting the lower circuit according to their shares. Whatever the lower circuit has been, they were hitting the lower circuit on the 25th and the 27th of January, the trading days. So the companies have substantially lost market value and price over these 2 trading days. Actually, if we look at Adani Wilmar, it lost 10%, Adani Power 10%, Adani Enterprises fell by 20%, Adani Ports and Logistics fell by 21%, Adani Green Energy, which is in the renewable space, fell by 22%, Adani Gas, total gas fell by 25%, and Adani Transmission fell by 27%. So there's been a huge fall in the prices of these, all the listed companies of the Adani Group. Now the timing of this actually of the report has been very, very bad for to some extent for Adani Group. Why? Because Adani Enterprises actually has come out with an FPO. What we mean by FPO is a follow-on public offer, right? So like we have IPO, initial public offer, where the company raises money from the public for the first time and then gets listed. Follow-on public offer happens similar fashion. The company raises money from the public, however this company is already listed. That's why it's called follow-on. It is not initial, it is not the first time, but the next time or the after the initial time, or somewhere when the company is already listed, they come out again and try to raise money from the public. So Adani Enterprises as of now has come out with one of the biggest FPOs, which is of 20,000 crores. Right, so they have come out with this, and this opened for subscription on 27th of January itself. It will remain open for 3 trading days till January 31st, 2023. So, and if you look at the price at which this will be, this is being raised, the price band is 312 rupees per share to 3276 rupees per share. So this has been the FPO price at which Adani Enterprises, which is the the main company of the Adani Group, is raising money. They have been raising, they have actually they want to raise this money for various reasons. 2 primary reasons for which they are raising money is, one, for green projects in the hydrogen projects and various other projects in the expressway and airports related. So these are the infrastructure projects that the various companies of Adani Group will be undertaking, for which they are raising money. So close to 11,000 crore they have stated they are raising for this. Another 4,100 crores they are raising for debt repayment, right? So yes, the company as a whole does have big amounts of debt, and they want to raise money to retire some of the debt and actually make a better capital structure and a better leverage position for the company, right? And the other remaining amount, approximately 5,000, 15,000 crores they are looking to raise for general corporate purposes, right? So this is why the company is actually raising money. So the timing has been very, very unfortunate, because after this release of the report, as I was showing you, the Adani Enterprises, the main company which is raising money through the FPO, has lost substantial amount, almost 20%. And as of now, the last closing on 27th, at the price was below the FPO price. So 27.68 is where the price ended, which is much below, almost 10% to 15% below the price band at which the money is being raised. However, the company has not made any change in its FPO price. This is already open till 31st of January, and the company has said that they will not make any change in the FPO price band of the company, because they are confident that they will be able to raise the money. And actually, before this report came out, the anchor investors had already started investing in the company, right? So but the impact of this has actually been felt after this was opened for subscription to the public. So on the first day, that is the 27th of January, only 1% of the offer was subscribed, which is in contrast with the anchor investors who actually oversubscribed it, and they have been able to raise 6,000 crores already from the anchor investors before this report was released. So how the response will be over the next 2 days for which the FPO is open will be seen over the next 2 days, on the 30th and the 31st of January. Right? Now, in all this, what has been the regulator's response? The regulator here is SEBI, right? So has there been any response from SEBI in this? See, on a standalone basis, the events that happen in the stock market and the movement in the stock prices is not something that SEBI can control or has to control as part of its duty. No, that is not what SEBI does, right? However, SEBI would be interested if actually there is any fraudulent activities taking place, right? So in response, SEBI has said that they will increase the scrutiny of Adani Group in general, right? And this is not really the first time that SEBI is scrutinizing the Adani Group. Okay, so initially also, the Economic Times reported that through their various sources, they found that SEBI has been actually investigating and scrutinizing the Adani Group overall in relation to their acquisition and funding of that acquisition of the two big cement players last year. So last year's Adani had actually acquired two big cement players in our country, listed one, ACC Limited and Ambuja Cement, right? So they had acquired this, and this was at a very high steep price of 81,000 crores is what they had paid and bought these stakes at. And this has been funded and been taken over by an offshore SPV. Offshore SPV, that means special purpose vehicle. They make a separate company whose only purpose was this. So they had and this was established outside India. So it was an offshore special purpose vehicle which was used to do this transaction of acquiring ACC Limited and Ambuja Cement from Holcim Limited, who were the original owners of these two companies, right? So in relation to how they have structured this, because there were many companies that were involved, SEBI had found there were around 14 offshore entities that was involved in funding of this particular transaction. So they are already scrutinizing, but they said that given this, they will keep looking into it, and if they have to increase the scrutiny of the Adani Group, they will do that. But in relation to the share prices, the short selling done by the research house, all that does not concern SEBI, and that does not really fall. SEBI has not said that, but if we understand SEBI as a regulator, see, the regulator's work is to ensure that the markets work efficiently. There is appropriate disclosures being done, there is information being shared with the public, they are available, but they do not manage the prices. That is not the work of any regulator, right? So if we understand this, we will be able to understand what the SEBI's role can be here. Okay, before I move on to discuss the next part related to the how true the report can be or is there any hidden agenda, let me tell you about a workshop that I am doing for SEBI Grade A 2023 preparation. SEBI recruits at the Grade A level every year, and for 2023, if you have any kind of queries, when to start preparation, how to start preparation, or if you have done the preparation, how to test whether you are prepared or not, in detail I will take up all kind of queries, strategy and your information that you are looking for related to SEBI Grade A on 30th of January at 6 p.m. So if you are interested in this workshop, you can register by finding the link in the description box. So let's go ahead to analyze, is the report true or is there any hidden agenda? To answer this, I will analyze about the Adani Group and then also about what Hindenburg Research company has actually taken a position against Adani Group. So let's understand the Adani Group and how they have expanded over the last few years. This is, from the Adani's investors presentation few years back. This is broadly their structure of the group. The flagship company is Adani Enterprises, in which the promoters or Mr. Adani has around 72.3% stake. Some of these numbers may be a little old also, but they are mostly in line. Then it's a big infrastructure and utility conglomerate. In energy and utility space, they have 4 listed companies. Adani Green Energy, which is in the renewable space. Adani Transmission Limited, which is related to the transmission of power. Adani Total Gas Limited, which is in the distribution of gas. Adani Power Limited, which runs a power plant, integrated power plant in the country. Adani Ports and Logistics, which is in the ports space. Then they have other infrastructure interest also in roads and airports, in materials and mining also. They took over, like I told you, ACC and Ambuja. So these are also listed entities. In the cement space, they also have presence in other metals, important one like copper, aluminium, and also have mining rights. And they are also in the food and FMCG through Adani Wilmar. Right, so these blue companies are the listed ones. So your green energy, transmission, gas, power, ports, Adani Wilmar and Adani Enterprises, the flagship company. These are the listed entities of the Adani Group. So it's a very, very big conglomerate in the logistics infrastructural space in the country. Now, if we look at how they have expanded over the last few years, specifically from 2014 onwards, the company has expanded through the brownfield or the inorganic route. What we mean by is by acquiring. So the organic route is when you set up new businesses on your own. Inorganic route is when you acquire or take over existing businesses to increase your own size, right? So the company has done more than 30 acquisitions since 2014. I'm sharing with you some of the bigger ones or the known ones that got the limelight of the media houses. So some of the very big ones or important ones acquisitions that they have done consist of the following, like the in the transmission space. They had taken over Reliance Infra's transmission business in 2018 at a whopping cost of 12,300 crores. Then for their power business, they had taken over GMR Chhattisgarh Energy in 2018 for around 5,200 crores. Expanding their port business, they took over the Kattupalli port in 2019 for approximately 2,000 crores. Then they have added SB Energy Holdings for 26,000 crores, and again strengthening their energy business and power business. They took a stake in the Mumbai airport in 2022. The amount was not disclosed. They have also taken over the Kohinoor rice brand, the Basmati rice, which is a very, very famous basmati rice and a very big export brand in our country for rice. They have taken that over again for an undisclosed amount. A few infrastructure development companies, SPPL and EREPL, they have taken over in 2022 for 610 crores approximately. Yes, this is the one I was talking about. To enter into the cement space, they acquired two established and the biggest cement players in the country, ACC and Ambuja Cement, and this was at a huge cost of 81,000 crores. They have recently in October 2022 taken over Airworks, which is to enter to strengthen their presence in the defense facility. So this Airworks is actually an maintenance and repair company. This they have taken over for 400 crores, and in December, this is actually ongoing also, some part of it is ongoing. They have taken over NDTV. Now this is a media and publication company, NDTV. They have taken the promoter stake for almost 600 crores, but this deal is in the open offer and all. It's still some shares are being taken, so this will go upwards also, right? So these are few of the ones, as I mentioned. They have done more than 30 plus acquisitions since 2014. So since 2014, the group has been growing at a very, very fast pace, and this has also reflected in the pace with which the listed companies of Adani Group have grown, right? They have given a return of more than 500% in many of them over the last 1 year itself, right? So now when we are talking about such huge expansion taken place, for this, of course, the company needs funds, right? And this has been one of the major reasons why the company has piled up with so much debt. So in the last trading session on Friday, on 27th, a lot of banks also lost share price, right? And the reason being that this is considered that Adani Group may now default, which would bring the banks who have given loans to Adani Group companies would face a lot of NPA issues or recovery issues. So a lot of banking stocks also fell, right? But banks have also given clarification that they do not have a very, very big exposure. Overall book, if they look at the overall book exposure is less than 1%. So many banks have actually given that they do not stand at a very high risk of debt defaults coming from Adani. If that so happens, nobody is saying that they will be defaulting, but if that happens, they do not have such big exposures. Having said that, Adani Group has actually raised money not just from banks, they've also raised it from the debt market with the help of issue of various bonds, right? So here is how they have borrowed, and these are the top 5 companies, right? So there are not all 7 companies, but the top 5 companies, if you will see, there is a huge debt that is there of 2.1 lakh crores that the company has taken, and this is just the 5 companies I'm talking about, not all of them. So yes, there was a huge fund requirement, and this has come in for in the form of term loans, in the form of bonds being issued for the funding of various acquisitions. Now, how is the company being able to raise so much debt? Is it so much profitable? Does it have so much of earnings happening? To some extent, yes, and to some extent, no. And this is where I will talk about the financial genius that has been used to be able to actually raise a lot of debt. Now, you can call it financial genius, or it can be called financial fraud. Now, this would only be understood when the financials are actually studied in detail and scrutinized. So I am not giving a judgment over here that whether this was a financial genius or a financial fraud, but how this has been structured, the financial structuring has been done to be able to raise a lot of debt is actually worth understanding. So when I'm talking about this debt being raised, is we also understand something else about the listing of various companies that took place. Now let's look at the timelines as how the companies, the 7 companies of Adani Group, I am excluding ACC and Ambuja because they have been acquired and they were already listed companies. But if I talk about the Adani Group companies, how have they been listed? There were 3 major companies initially, and Adani Enterprises itself was listed in 1997. After that, when later they entered into the port business, they got listed in 2007, and in 2009 Adani Power was listed. After that, the company was majorly running on these big businesses that they had in the power and the ports segment, and there was no other companies being listed during the following years. Then in 2015, after 9 to in 2015, after almost 6 years, the company actually started acquiring other businesses. I told you there have been around 30 plus acquisitions that have been done since 2014. So after 2014, the company has been expanding both organically and especially inorganically, right? So in 2015, if you will see, Adani has been listing more of its entities. They first listed Adani Transmission in 2015. After that, Adani Green Energy got listed in 2018. In the same year, Adani Total Gas was also listed. And of the last one, very recently in 2022, Adani Wilmar, their FMCG goods company, which is in the import of the edible oils, was listed. So you will see how fast there have been listing of 4 entities of the Adani Group after 2014. Now, how has this been useful for the group? Now, this has been useful for the group. Why? Because now in all of these, Adani Enterprises has shareholding, which I had shown you before in the Adani's companies group structure, right? So Adani Enterprises has a stake in all of these companies. So when the share prices of these companies go up, and why does the share price of these companies go up? They go up because of Adani's brand value, but also because of the projects that they are able to get. Now, why are they able to get the projects? Why? Because as a consolidated basis, Adani Enterprises net worth can be used to bid for various kind of projects, and then that experience is used and their credibility of the Adani Group is used to list these companies which go on to do well in the share market, with their prices going up and up. And if you see their trajectory has been very, very steep. Many of these companies have given returns of 500% plus. So there has been a substantial increase in the share prices of these companies. So when the company use these shares as a collateral to raise debt, what that means is Adani Enterprises pledged a percentage of their shares in these companies with the banks to actually get loans, right? So these shares whose value, say for example, is 1,000 rupees, and if you are taking a 10% stake or a 10% shares you are pledging, you will be able to get a substantial part of it as loan. So even if the banks discount it and give you only 70% of the collateral value as loan, the company is able to raise big amounts of loans on the basis of the shares that are being pledged, which are doing very, very well. So till the time these shares keep doing well and their values are much above the loan amount that has been given to them, they are in a comfortable place. So a lot of these company shares have been pledged to raise debt. So if you will look, Adani Power around 25% has been pledged. In Adani Greens, 4.4% of the shares have been pledged for raising debt. In Adani Ports, 17.3%. In Adani Transmission, 6.6%. And some other companies, Adani Enterprises, a small amount, 2.7%. And ACC, 11.7% has been pledged to raise loan. So this is how, Adani has been able to first list its companies, drive its value in the share market, raise their prices accordingly through various projects that they have undertaken or they are going to undertake based on their experience in the various infrastructure space. They are able to earn and win projects, and those projects then become the pipeline based on which the company's future value is then expected to be going up. So based on this financial modeling or structuring, the company has also been successful in raising debt to a large extent. So there's nothing illegal in this, till the point all the fair disclosures are being made, and as per the company, their financials are audited by reputed auditors. Their company's debt are rated by reputed credit rating agencies. The listed companies are subject to a lot of disclosures as per the regulators like SEBI and RBI, and they have done that. So they have used this financial structure to be able to grow their businesses both organically and inorganically. So this is what is the structure of how Adani Group has been growing. Now, if we look at the Hindenburg report, the Hindenburg report also states that because they believe that there is overvaluation of the various group companies of Adani, they think that there can be an 85% downside, and to be able to benefit from this 85% downside, they have short sold, or it is also known as short selling. So they have short sold the stock of various Adani Group's listed companies. Now, what do we mean by short selling? I will come to it in a bit later, right? But that means the company is betting that there will be a fall in the share prices of all the Adani Group listed companies. Now, when you are doing that, you basically, and then at the same time, you release a report where you are, almost making accusation that the company has done fraudulent activities, they are misrepresentations, accounting frauds they are involved in. This has actually broken down the price, of course, which is now working in the favor of Hindenburg's short sold position, right? So there is an India-based, Bangalore-based company in the corporate governance space by the name of InGovern, which has stated that this way of actually releasing report, it's very short term focused and looks very opportunist. The kind of disclosures that they have made and the points that the report raises actually are not something very new. All these facts have already been known, so there are no new facts that this report is actually bringing out. And various allegations that they have made, this is a compilation of all the past allegations. So it is not like the company has been raising debt on the basis of pledging of shares is something that has been found today. It is a known fact, and they have been doing this, and it is very much legal in which they have been doing. And also they are saying that somehow it looks fishy because the report has been released just one day before the FPO of the company was to open. So the timing of the report is also looks very strategic, and there could be an objective to scare the investors. So this is what one of the it's a private proxy company in the corporate governance analysis space by the name of InGovern, which is stating that a lot of information that they have used is actually in the public domain. It is well known, and there are various allegations which are already being investigated by various regulatory bodies in our country. I had shown you one of them, like SEBI also stated. They are scrutinizing them in relation to the funding they have done for the ACC Ambuja Cement Company's acquisition. So it is very ill-timed or strategically timed kind of a report, which is actually benefiting Hindenburg's short sold position. right? So as I was telling you, you must be thinking, what is short selling? Now, short selling, or basically selling, is when you are selling a particular company's shares with the help of derivatives like futures. So derivatives are used, and there are various kind of derivatives like options and futures are there, right? So they are also known as F&O, futures and options. So in short selling, what you do is you are selling the futures of the company's equity which you do not own, right? So how do you sell something which you do not own, right? This can be done with the help of, say, futures. So if you think that something is going to fall after a period of, say, 1 month, 2 months, sometime in future, the prices of a particular asset are going to fall. So in our case, say we take Adani Enterprises, right? We say Adani Enterprises shares are going to fall in future, right? But I don't have these shares, but I want to benefit from this fact, right? So in that case, what I can do is I can sell the futures of Adani Enterprises, right? So when I sell the futures of Adani Enterprises, if actually that does happen, and there is say if they were at 3,000 when you decided to do this, and they fall to 2,500, then you make a 500 gain per share, right? So this may look very simplistic, but actually this all adjustment is done on a mark to mark basis, which is on a daily basis, right? Every day the movement in the share prices, whatever is happening, your positions are actually adjusted, which makes this proposition much more risky. And short selling is even further risky, because in that case what happens is you do not own the shares and still you are selling them, right? So something that you don't own but you are still selling, which means that in case this does not happen in case of shares, because you don't really have to buy them, but this can be very risky. So there are a lot of restrictions and rules that are placed by the regulator in terms of the short selling, that like how much you can sell, what kind of margins. So these require higher levels of margins to be put with the brokers, right? So it's a very, very risky proposition, and to be able to understand that before you start thinking that let me also make a quick gain by doing this, please be sure that derivatives trading is very, very risky. So until and unless you fully understand the operational aspect and not just the definition, please do not indulge into it. I have also done a report and video recently discussing the SEBI report, which stated that individual traders have actually lost a lot of money in F&O, that is derivatives market, equity derivatives markets trading, and 90% of the traders end up losing that. So if you want to understand that, you can watch this video. You will find this link in the description box. So that was a little about the short selling and the futures market. Moving ahead with our agenda, what can SEBI do now, right? As I told you before also, SEBI is already doing its part of trying to investigate and find if there have been any malicious or fraudulent activities. And this is not based on only Hindenburg's research report, but its own ongoing part as a part of the regulatory function that it does, that anything that looks suspicious or malicious or worth investigating, they will continue to do that. What can they do exactly here? Not too much further. As I said, in relation to the stock prices, SEBI does not interfere. So the market is free to decide the price based on the demand and the supply. And SEBI will only take care that all the relevant information, disclosures are in place to help investors take an informed decision. But as a regulator, it is always good to keep strengthening your regulatory and supervisory actions and teams. Right, so that is what SEBI can continue to do. They should continue to keep educating the investors about the various risks, and the report that SEBI has come out with recently is a point in contention that SEBI is taking its job very, very seriously and trying to make people and investors aware about the various risks and what they should keep in mind, and also coming out with various regulations and policies to help better data sharing, in the market related to the trading data also. we can keep developing, SEBI can keep developing the disclosure norms to increase transparency and efficiency of the markets. And one more important point I would like to highlight here is more manpower at SEBI. So you may know that SEBI actually being the market regulator, and it is looking at various markets, not just a segment of the stock market. They are looking at the stock markets. So all the kind of capital markets basically are included under its domain, including the stock and equity markets, the derivatives market, the corporate debt market is also under it. The various other entities functioning in these markets, intermediaries, market infrastructure intermediaries are also under its domain, including foreign portfolio investors, alternate investment funds, mutual funds, and so many other kinds of entities. They're also looking at the commodity market. Right, it's a big regulator just after RBI, and very important part of the financial system they are looking after, and they are being run by almost 900 employees. So in terms of their employee base as a regulator, they may still be very young and growing steadily. And having said that, so there could be a lot of requirement if we compare that with RBI, how the regulation and the supervisory roles have been improving. In RBI a few years back, they segregated their regulatory and supervisory department, right, so as to be made give more attention to the supervision aspect, right. So as SEBI keeps growing, their supervisory role may also need a lot of attention, and they should maybe look at more manpower at SEBI. So maybe this is something that I am contemplating. Nobody can be sure. The best is the SEBI chairperson to decide how SEBI can continue doing the good work that it's doing to make the Indian markets much more resilient and much more efficient and transparent. So that's all from my side. Those have been my thoughts. I would love to hear your thoughts and your views on this case between Hindenburg and the Adani Group, and also your comments as to what you think SEBI can do further to improve the Indian capital markets. So that's all. I hope you have been able to understand this and benefit from this video. Keep preparing 50% faster with iExamB. If you have liked this video, please don't forget to subscribe and press the bell icon. Thanks and all the best.